So now we are going to do the 14.2 work together. You can get the instructions here, or they are on page 417 of your book. They say to enter a 0 instead of leaving a cell blank, and for negative numbers to use the minus. It's given us the comparative balance sheet again, and if you recall, all these current assets we did in the operating activities section of the statement of cash flow. And then we're going to do this in the investing section. And then we did this in the operating activities section. And we'll do all of this in the financing section. So again, I have put balances in, and it wants us to complete the investing, financing activities part of the cash flow, and then compute a couple of the ratios. So this all comes from the balance sheet, and I computed the increases or decreases. And again, the decreases are negatives and are in parentheses. So let's just classify these things. Office equipment is a long-term asset, as is store furniture, building, and land. And then mortgage payable is a long-term liability, as is bonds payable. And I, again, want to start with liabilities because I know that it's easiest to do that. So a negative, they go in the same direction, is a use of cash. And a positive is a source of cash. And then it's opposite when we're dealing with assets. So a positive there is a negative here. Positive is a negative or a use. That's a no impact because it's a 0. And a negative is a positive source of cash. So we're going to use those numbers when we go down and fill out the statement of cash flow. So let's go ahead and do that section for investing activities. So the addition to office equipment was $3,000, and it was a use of cash because we bought some. The same on store furniture, and the proceeds from the sale of land were a source, and the amount of that was $12,500. If I add those three things up, I get the cash provided by investing activities, which is $6,500. It is provided by source. It's a good thing. So that is the investing section. So they provided you these two numbers. The sale of additional common stock of $10,000 is a source of cash. We get money from that, and when we paid the cash dividend, that was a use of cash. So again, we'll come down and fill out this section of the cash flows from operating activities. So the mortgage payable and the bonds payable of $7,500. So repayment is a use of $7,500, and we got proceeds from the issuance of bonds of $5,000. We got proceeds from the issuance of common stock, which was $10,000, and we paid dividends of $5,000. Oops, that needs to be a negative. A use. And then we add all four of these up, and we would get $2,500 as the cash provided by financing activities. Then it wants you to finish the rest of it. So the cash flows that we had from operating activities when we were in section 14-1's work together was $19,880. We would add the $6,500 and add the $2,500 to get our net increase in cash of $28,880. And then the cash balance at the beginning of the year, we have here at $20,500, and we went to $49,380. So if I take cash balance at the beginning of the year, which was $20,500, then I add the $28,880, I get $49,380, and that does agree to what my cash balance was at the end of 20X2. So I know that my cash flow worked and I didn't screw up any of my signs, which is a good thing. So then the next thing that it wants us to do is it wants us to calculate these operating cash flows and cash flow margin. So to do that, I take the operating, which is in 14 months, the operating cash flow, which was $19,880, divided by my current liabilities. And if I go up here, my current liabilities were $35,300. You see it there. $35,300. And I compute that out, I would get 0.56. And if you recall, this is similar to the current ratio. We want it to be 1.0. So although positive and not terrible, it needs to be better. We need to get it up to 1.0. So that is kind of our standard we're comparing against, and we need to do something. We need to generate more up here or less down here to increase that thing. And we can talk about specific steps for that. So to do cash flow margin, I'm going to take my operating again, cash flow, and I'm going to divide it by net sales. And it tells us in the directions on page 417 that net sales equal 24,645. And if I do that, I would get 0.81. And again, what is that saying? That's saying that for every dollar of net sales, I'm generating 81 cents of cash flow. That's pretty darn good. That is making it so that I can pay back or use my cash for what's needed, be it paying employees, be it paying off accounts payable or more on my mortgage or whatever the case may be. So both of these are not bad at all. This one really good, that one close to being good with a few changes. So they are in a really strong cash flow position at Western Wear. And that wraps up doing a statement of cash flow indirect method.